Hello, business owners. Welcome again. Today is Thursday, the 23rd May, and I am excited to be sharing with you tonight about some really important information about your your agency's accounting system. Okay. So last Monday, we started talking about the value of accounting for your agency, for your small business. I touched on a little bit I touched on, excuse me, a little bit on the type of information an accounting information system provides to us as business owner and the usefulness of that information to make good decisions for our businesses. Okay. We touched on a little bit on what makes the accounting information important for us as business owners, right? We talked about the fact that for the accounting information to be useful to us, it needs to be accurate, right? So it doesn't matter if we have an accounting system and that accounting system produces information that is not accurate. Okay, so that's number one. Our accounting system needs to be able to create accurate financial information. We also talked about the fact that the accounting information needs to be able to provide timely information, financial information, right? It doesn't matter if I need to make decisions now or today, and my accounting information system isn't ready to provide the type of information that I need to make these decisions, okay? And similarly important, we talked about the relevance of the accounting financial information. Not all information is necessarily important for a business owner. A business owner is in a position where they need to understand the information that is relevant to execute on business information. So if you are a business owner, you are an agency owner and you're running a business, not every single detail is important. That's why our accounting system is supposed to be designed to capture the relevant type of information, okay? And today I want to start talking a little bit about the three important financial statement you need to run your business. We also talked about it towards the end, but I just want to recap a little bit more on the financial statements you need to run your business and some additional details. And then we're going to look under the hood how your financial information actually come together. Okay. But before that, let me introduce myself. My name is Luntadila Paulo. I am the founder and CEO of Yetu Accounting and Tax PLLC. I run a small business in Chicago and I help small businesses, specifically marketing agency, achieve three things in particular. Number one, I help business owners save money on taxes. I want to make sure that you're not paying more taxes than you're supposed to, so that you use those tax savings to invest in other areas of your life, maybe retirement, maybe traveling the world, maybe reinvesting into growing the business. Okay, so that's number one. Number two, I want to help business owners run more profitable businesses. We offer a free profit and cash flow analysis that helps us understand the business, okay, an agency, so that we can figure out how to either increase your revenue and reduce your costs, or both, ideally, right? So that we can boost your bottom line. And number three, we want to help you optimize your cash flow. We want to close the gap between when you get the cash and when you need to pay the expenses, right? If we can match that as close as possible, that's an optimal place to be, okay? And figure out ways to make sure you have continuously cash on in your business to cover any short-term or long-term financial obligations. Okay, so let's go back to our topic today, right? We're still talking about bookkeeping, financial reporting, accounting for marketing agency, right? So I'm calling this a boot camp so that you can learn as much as you can about your financial reporting. Look, many times, or more often than not, business owners, agency owners think, hey, look, I already have my accountant. My accountant takes care of everything. They just provides to me the financial statement. I'm good. That's all. No, wrong. That's not all. You need to understand how your financial information gets put together. I'm not telling you though that you need to become an expert, that you need to become an accountant. No, by no means, okay? But if you get audited, the IRS is not gonna go after your accountant. Guess who the IRS is gonna go after? You. That's right, you. So you need to be able to defend your numbers. You need to be able to support what's actually happening on your tax returns, your financial reporting, especially if you have partners, especially if you have investors, especially if you plan to one day sell your business. Okay. So we want to make sure that we actually, as business owner, we understand each line item in our financial statements. Okay. If my profit and loss statement is showing that I have a revenue of $1.5 million in 2023, I need to know how did we get to that number? Okay. What transaction, what client paid to get to that number? If I'm seeing total expenses was over $1 million, I need to understand what specific expenses that came together to make up that over $1 million in expenses. Okay, so I really want you to think about this, right? As a business owner, how much do you know what's actually taking place on your profit and loss statement, right? How much do you know what's actually happening on your balance sheet? Okay. Most business owners don't even have a cash flow statement, which is very problematic. Okay. Even if you run your business on a cash basis, right? You really need to be able to articulate, okay, what's taking place in your financial statements. So let's look into these three key financial statements, and then we're gonna look into some additional reports. So I'm actually gonna go back and share my screen here with you so that we can follow along here, right? So the first thing that I am looking at, right, in order they get prepared is the P&L, okay, profit and loss statement. Other people call it the statement of operations or the statement of activities, okay? So our goal here is really looking into the different level of profitability, right? So in a typical P&L, we begin with revenue, and then we have our cost of generating revenue, and then we have the gross profit. That's the number one level of profitability, right? Number one measure of profitability. And when I get that gross profit, I'm looking, okay, how much of our gross profit is covering our operating expenses, right? So typically for an agency, right, a marketing firm, our cost of revenue is going to be made up of, and here I'm going to just close this and go back here into my other screen here, just to show you my chart of accounts here for a second. Okay. So if you don't know what a chart of account is, I'm going to recommend you to go on my Facebook page and look up and look up the chart of account video that we posted. Okay, you can also see the same video on my YouTube page. You'll find that. But here's what typically we are seeing in the cost of revenue, or also the cost of goods sold. Okay, we're looking into the labor to serve the clients. You know, the cost of labor that directly is assigned and allocated to specific clients, right? To specific project campaigns or engagements, right? We're looking into materials. We're looking into subcontractor, mileage reimbursement, travel, credit card processing fees, meals and lodging associated with specific accounts, and other overhead costs. Okay. Many marketing agencies actually have a serious problem because they are underbidding their project, or underpricing their services. And guess what? Why? Because they have no idea what is the true cost they are incurring in specific campaigns, in specific clients, in specific projects, okay? And as a result, they're actually losing money without knowing it. And some other clients are making up for that loss. And that's how, at the overall level, they think they are profitable, okay? So it's really important for you to understand, okay? We also have another video that discusses customer and revenue analysis, where we break down, we show how an in-depth analysis, okay, of individual customers and their contribution margin and their level of profitability could actually give us insight into which clients are good for our company financially wise and which clients are not necessarily good for our business profit. Okay. So, but going back, I really want you to, look into your profit and loss statement and tell me, do you have a line item? Excuse me. Let me actually bring my microphone a little closer here to me. Do you have a line item, okay, in your profit and loss statement that actually breaks down the cost of generating revenue, okay? If you don't, you really need to go back into your chart of account, your whatever system you're using, okay, to make sure that you're actually capturing the cost of servicing clients. And then that's what takes us, let me just open here my profit and loss statement, right? So that we can actually see, I'm gonna make these a little bit smaller here, 125, okay. This is perfect. So I have my revenues, okay? And I'm showing the different type of revenue of income, different streams of income, okay? So that I know, okay, which service that I'm providing is actually generating the most revenue to the firm, okay? And again, if you go back to our revenue and customer analysis, you'll see how much we went into studying this specific item, okay? After the revenue, we have our cost of revenue, okay? And then we have our gross profit or contribution margin, okay? After that, we have the famous operating expenses, right? So we break this down into general and administrative expenses, right? There is quite a bit here, right? And then we have the selling expenses, right? And then we have the total expenses here. Okay, I'm gonna do some entries as an example in a little bit here, but I just want to get a sense of how the profit and loss statement actually work. And then our subtraction of I'm gonna close this up so that I can only see one line item, right? I'm gonna close cost of goods sold, and then I'm gonna close the admin expense, and then if we subtract the gross profit to total expenses, operating expenses, then we get the net operating income or loss. Okay, that's not the net income, because underneath it, we can have other sources of incomes and other outlays of expenses, okay, that are not core to the business, that are, I'm gonna repeat this, that are not core to the business, okay? We're not in a business of investing in the stock market. We're not in the business of, investing in oil and gas investments, okay? And therefore, the income we generate from dividends, from interest, from royalty or referrals, they are not core to our business. That's why we have to put them under other income, okay? Even though from tax perspective, right? Even for tax perspective, especially for tax perspective, dividend income, interest income gets taxed in a lottery. Okay, I am back. It seems like I got disconnected for a second. But what I was saying is, okay, after the other income and expenses, we have gains and losses, right? These are things that are incidental to our business. And then we have actually the net income, okay? So this is just to give us an overview of what a P&L actually looks like, okay? After we go through the P&L or profit and loss statement, then we arrive in at the balance sheet, right? So the balance sheet shows us on one end all the assets we own and control, right? Some assets are not necessarily ours, can be leased in the long run. Therefore, we put it into our balance sheet because we have the right of use of these assets, right? So these usually would apply for, very large and long-term assets that companies lease but needs to be capitalized into the books, right? So we're talking about, heavy equipment, heavy machineries, in the oil and gas space where they don't necessarily buy the equipment but rent it for or lease it, excuse me, the right expression, for many, many years, right? For the exploration of oil and gas. Okay. And they have to capitalize it, meaning they have to put it into the balance sheet. But for a digital or for a digital marketing agency or any type of marketing agency, right? Your balance sheet might not have so much fixed assets, right? So most of your fixed assets are going to be probably computers, streaming devices, and so forth. But let me show you actually here on my chart of account some of the interesting items that I often find in marketing agency firms. Okay, so on the balance sheet side, these are just some of the accounts from one of the clients I had recently that we had to create for them, right? So under cash and cash equivalent, we have several bank accounts, and then we have receivables, and then we have allowance for doubtful accounts, okay? We have other receivable from employees and from owners. Inventories don't necessarily apply for marketing agencies, okay? Because they're not really selling per se goods. Sometimes I see, things like hats, t-shirts, some of these small things that they can keep as inventory. I see a lot of prepaid expenses, okay, under the assets of a marketing agency. I see a lot of prepaid, premium, insurance premium, dues and subscription. Technology is a big one. I see prepaid rents occasionally, right? I also see prepaid professional fees, whether it's accountants or lawyers. Okay. I don't really see a lot of these, right? Short-term investments. I don't really see a lot of that. I occasionally I see buildings, right, for larger marketing agencies. Okay. I see land. Okay. Most people actually put the building and land together, which is incorrect because you cannot depreciate land, right? So when you are running your depreciation report and you have you have a depreciation based on the value of building and land, you're actually making a huge mistake, right? So it's important to segregate these two. Excuse me, not segregate, separate these two. We see a lot of equipment, right, among tangible of fixed assets, a lot of computers, printers, copiers, scanners, drones, cameras, and camcorders, and other technological equipment. A little bit of auto and vehicles. I also see them a little bit there. I love BMW. That's why I use it there as an example. Um, I don't really see these asset restricted for future investments. I rarely actually see these fixtures. Yes, when you have a building, you will have fixtures. Okay. Often also you'll have furnitures, okay, and depreciation have to follow each type of fixed asset that you actually have. And then we have intangible assets, right? Intangible assets, an area that I see a lot of mistake taking place is when marketing agency firms that are less than 5 years old and they do not have capitalized startup and organization like expenses into their asset. That's a big mistake. That's a big mistake because when the correct accounting should be capitalizing all up to anything over 5,000, right? That you're not running for tax purposes, right? You should capitalize that. Any cost of raising debts should be capitalized. Any IPO you're developing internally, right? The cost of labors, of the softwares, and so forth, a good part of it needs to be capitalized, not all of it though. Some of it could be should be expensed. Goodwill, if you purchased another marketing firm or another firm in overall under your current business, right? You'll have goodwill that needs to be amortized. And again, amortization needs to follow the same order of intangible assets you have. So that would be our asset side, right? So if I go here on the balance sheet side, you'll see exactly that, right? So this is just an example transaction that I'm showing here, right? So we will have that, right? Our current assets and then long-term asset, and you'll see a little bit more breakdown here, okay? So this is just to give you an example of what actually happens around these document, okay? I'm gonna go back to, as I said, on one end we have on one end of the balance sheet we have the assets, but on the other hand we have the liabilities and the owner's equity, okay? So let me show you again some of the accounts that make up, right, the liability side. So the usually we'll find accounts payable, right? Accounts payable can be reimbursement to employees, to reimbursement to owners, to vendors, and other AP. And then we have unearned revenue, right? This is one of these things that I also often see that a lot of marketing agencies do not have. So the idea around unearned revenue is essentially the following, right? When you are an accrual-based business and then you receive cash for services that you haven't provided yet, that's not income. Again, that is not income, okay? That is simply the cash that you received for services that you are obligated to perform in the future. You recognize income after you have performed the service, okay? You recognize the income after you have performed the service. So that's why we have the unearned revenue by the type of revenue source that usually make up our revenue in the firm, okay? So make sure to include that into your accounting and financial reporting, okay? And then we have refundable and deposits in advances, right? Some of my clients in the marketing space, right, receive deposits from their clients that will be used to fund paid ads, for example, okay? So that cash is not revenue for you, okay? That's the cash the client put into your business to run the campaigns, okay? So we want to make sure that we are keeping track of other people's money, okay? Other people's money, because we don't want to put them together, right? On the operational side, what we actually do for some of the client, we create a type of custodian account, right, where that money goes into, okay, so that there is no mixing of money, okay, and then each deposit that is getting to that account, it's gonna be reflected. It's gonna have a credit account into our refundable or deposits in advances, okay? And then we have accrued expenses, right? So accrued expenses follows the similar logic to prepaid assets, okay? So in the prepaid assets, we're paying ahead of time for things that we will benefit in the future. Accrued expenses are the things that we already use, the type of expenses we already used up, but we haven't paid for just yet, right? So we're booking to show that, hey, there are balances coming up due that we need to pay, but we haven't paid them yet, okay? And then we have salaries and wages payable, benefits payable, depending on the type of benefits you provide to your employees, right? These could be different, okay? I almost always recommend my clients when they have employees to have these separation, right? Salaries and for owners, salaries for management, and then for the remaining employees, right? So that we can actually see, okay, which group of employees are of team members are costing the company more or less and by how much. And the same thing about bonuses as well, right? So if we're giving bonus to owners and managers and other employees, we need to also reflect it there. And of course, we have credit cards, right? All of us use credit cards today, or at least the majority of us. So these are the current liabilities, okay? And then we go to the long-term liabilities, things like notes payable, mortgage payable, loans payables, bonds payable. Usually, smaller companies don't really have bonds. We often see bonds in larger companies who are capable of issuing bonds, okay, and have a credit ratings that justify the cost of money they have, of debt they have, okay? And then finally, we have the owner's equity piece, right? So I have retained earnings by each owner of the business, the contribution account, okay, the distribution account also by each owner, so that we are showing, okay, the earning, the contribution each person put into the business, the distribution they got out of the business, okay, the earnings they have received from that they have accumulated from the business up to date, okay? So this is really critical. And how does that actually look in real life? Okay, in real life, this is how it actually looks like. Okay, we have the current liabilities. Okay, and then we have the long-term liabilities. We have total liabilities, which is the sum of current liabilities plus long-term liabilities. And then we have the owner's capital. Yeah. So this is how actually our balance sheet would look like and come to play, okay? And then we have the statement of cash flow, okay? I hope this has been clear enough for you. So and when we're looking into these documents, right, we're assessing different metrics. We're in the next live, we're gonna talk a little bit about the analysis of these document of these. On Monday, we're gonna talk about the analysis, the ratio analysis, right? The trend analysis, the common size analysis, okay? So that we can see how the type of information this document can also provide to us. And then the other reports that I'd like to add here that as a business owner, we need to always take a look at are the aging account payable, the aging accounts receivable, the sales report, and the cash report, okay? The cash report, we wanna, depending on the type of business we're running, but for marketing agency, I want you to look into your cash report at least in a weekly on a weekly basis, if not even daily basis, right? You need to know the cash in your business, because cash is the life of your business. If you don't know your cash level and suddenly a huge expense hits you, guess what? You are in a big trouble. You need to know your cash level all the time, all the time. Your accounts payable, you need to know what outstanding payable you have that are coming and you will have to pay, okay? Outstanding receivable, you need to know which clients haven't paid yet. If they are past 30 days, 60 days, 90 days or more, okay? Those who are past 90 days, it's possibly a problem, okay? What can you do to expedite your collection? Okay, if the majority of your clients are paying you over 60 days and you have to pay your payables under 45 days or even under 30 days, you could be in a cash problem there. You know, that's a really good recipe for problems. Okay, so you really need to be careful and pay attention to these reports because they help you get a view of where things are and whether or not you could end up with cash problems. Okay. So that's very important. Very, very, very important. I can't stress that enough. Okay. And your sales report, right, helps you see, okay. And again, I'm gonna say this again, just one more time. Okay. You need to go back on my either YouTube channel or my Facebook page to look into the video, the live we did on customer and revenue analysis. Okay. Customer and revenue analysis to see how much we look into revenue. Okay. Because we can get so much insights when we look, when we examine our sales report and actually start understanding what's happening in our client base. Okay. Because one of the key issues that often comes up is customer concentration. If a large part of your revenue depends on two, three, maybe five clients and contribute over 50% of your revenue, that could be a problem for your business sustainability as you move forward. What if one or two of these clients closes up, goes out of business, okay? Or just decide to stop doing business with you and move with somebody else. Okay, that could be a very big problem for you. So that's the reason, right? I can't stress enough. You need to understand your customer base. You need to actually, you know, as a business owner, every quarter, you need to stop and look into each account. Okay, at least every quarter, you need to sit down and look into each account. Okay, how are the customers coming up? Okay, what customer is at risk of which customer are we at a risk of losing them? Okay, and why? What can we do to keep them? Are some customer that we were expecting them to spend a little bit more money with us that are not spending the level of money we expected them to spend with us, and if so, why aren't they spending enough money with us? Okay, uh, are some client customers that we could help them, we could provide them more value and therefore boosting a little bit more our revenue from them as well. Okay. You know, by looking into these areas, right, we can start making steps towards understanding our client base, knowing how we can better support them and help them so that we know that in the long run, we're still going to have a business that makes sense. Okay. So that's another key area that I wanted to touch on. So, you know, I'm trying to make this live shorter so that when you, for those who are not following, can connect and get the most value from the lives as quick as possible. Okay, so that in the next live, right, we can resume where we stopped, and that way we can continue creating value for you as a business owner. So in that spirit, I'm gonna stop here, okay, and we will continue our boot camp. Next week, we will look into some analysis. We'll look into some simple accounting, okay, so that you can start seeing how these your financial statements, balance sheet, P&Ls come together for you. Okay. So if you want to book a call with me, okay, uh, I'm more than happy. Oh, Jesus Christ. It seems like I wasn't actually sharing my screen here. Okay, when my computer disconnected. Um, oh, that's bad. Anyways, so well, next week when we come back, I am gonna go over some of this information again. This is my balance sheet, right? My current asset, long-term assets, and then current liability, long-term liability, and then owner's equity. Okay. And then my balance sheet, P&L, excuse me, I have my revenue, I have my cost of revenue, I have my general and admin expenses, and then I have my selling expenses, okay? And then I have my other income and other expenses, starting with other income and then other expenses, and then I move to gains and losses. And then I have my pre-tax income, okay? If you're a corporation, then you have your 21% taxes there slammed at you, okay? So again, my apologies for about the screen share problem we had there, but yeah, we're gonna resume next week on Monday at the same time, 5 o'clock with me here, and on Thursday as well. Again, if you wanna book a call with me, please visit my website, or by simply going into my calendar in an email, or just DM me on Facebook, on LinkedIn, okay, and I will shoot you the link to my calendar, and we'll move from there, okay. So thank you for your time tonight. It was a pleasure to be here with you, and I hope this information was as valuable to you as it has been for my clients and for other business owners that I speak with. So have a great rest of your day, of your night, and cheers. I will see you soon.